Hello ladies and gentlemen, in this video we are going to see about a capital market. So as I already said in a previous video, capital market was basically classified into two types. One was a primary market and another one was a secondary market. So primary market, there will be an initial public offering. Initial public offering is nothing but a shares was issued by the companies for a very first time. So it was a very first time the company issues a share to the public or to the some organization or investors. Secondary market is nothing but a trading of a shares will occur. It is not a initial public offering, but here the trading of a shares was happened in the share market. So the persons, the investors will be involved in a buying and selling of a shares that was already issued. That is what is known as a secondary market. So now we are going to see about what are all the participants, who are all the participants of this capital market. So who are all the participant who participates in a capital market. First one is an individual person. So individual person is nothing but a people like us. Okay, people like uh, a normal people, a normal individuals, normal citizens of a country, not only the citizens, but also any person, any individual. So that is what is known as a individual persons. Next one is a corporate. A corporate is nothing but a company which needs to raise the capital for its investment activities or any other activities. So basically, these corporates will issue the shares to the public or to the any other organization in the capital market. Next, banks. Banks also invest in a capital market. Okay, banks also need to raise a fund. Banks also invest in a capital market, or banks also raise a fund from a capital market. Next one is a financial institution, a small financial institutions, micro institutions like that. Next one is the provident fund. So we already know that the provident fund is nothing but uh, a fund that was raised from employees of a particular organization or any organization. So on a salary of an employee, some particular amount was held as a provident fund. So it is like an investment for such an employee in a capital market. Next one is the government. So government also raise a fund from a capital market, or a government also invest in a capital market. Next is the foreign countries, foreign financial institutions. Foreigners also invest in the Indian capital market. So that is what is known as foreign countries or foreign country individuals. Next is insurance funds. So insurance funds like general insurance or any other insurance, health insurance, mobile insurance, then automobile insurance. So like we people are paying a insurance premium, okay, for any kind of an insurance. So such a premium was used by such an insurance companies, and they invest in a capital market for earnings. So these are all the participant. These are all the basic or important participant in a capital market. Sometimes a corporate not only issues shares and raise funds from a capital market, but also they invest in other uh, entities, other companies. So once one particular corporate companies invest in another company, they may have a ownership right. Take for example, if company A is buying the shares of a company B, which means that the company B is selling the shares to a company A, what happens is that a company A have a particular ownership right according to their investment in a company B. So the corporates also invest in other companies in the share market. So these are all the basic or important participants of a capital market. Okay, next one is what we are going to see is about general characteristics. What are all the characteristics of this capital market? Raising of a long-term fund. So as I already said that a capital market is for raising a long-term fund which is more than 1 year. So if a company or any other entity wants to raise a fund more than 1 year, a capital market is a suitable place for that. Both equity and debt were traded. So trading of equity is nothing but a shares that was given by a particular company, and debt was nothing. Debt was a particular debt bonds. Okay, that was also traded in a share market. So we are going to see about detail in what are all the bonds, what are all the bonds that was raised in the upcoming videos. Now I'm saying in general what are all the characteristics of a capital market. Next one is the securities. There are basically three types of securities that was traded in a share market. First one is a financial securities. Second one is a government securities. Government bonds can be traded in a share market. Next one is a semi-government securities like securities of a public-private ship partnership, a PPP model securities can also be traded in a share market. So these are all the basic securities that was traded in a share market. So next one, what are all the benefits? What is the benefits of each stakeholder of this capital market is that we are going to see now step by step. First one is the benefits for a company. What is the benefit for a company which raises a capital through a capital market is that better price. So there are many ways. In a many ways, company can raise a fund for their company. Okay, like for example through debentures, through venture capitalist, through capital markets. So what is the advantage of these capital market is this: they can able to get they can able to raise a fund at a low cost. Okay, when compared to the other routes, other sources. So a capital market can provide a better price for a fundraising. Next one is a longer maturity. So it has a maturity of more than 1 year. So they can able to raise a funds for a longer term. Can raise a fund for a riskier activities. Generally, a company can also able to raise capital from a banks. Okay, but banks, most of the banks does not provide a fund for a very riskier activities, a very riskier business or a very risk type of a business. So in a share market, a company can able to raise a funds also for a riskier business or riskier activities. Next one, what is the benefits of a capital market for a government? So the local investors, government and the local banks. So there is an engagement of trading activities at a local level, at a local business level, and at a local banks can be involved in these trading activities. What is the benefit is that a government can overcome a exchange risk, foreign exchange risk. The government, generally government raising funds also through a foreign exchange or foreign funds are involved in a government activities. Government wants to raise a fund. It can be raised in a many routes like through a banks, through RBI, through a capital market, from a public, from a foreign investments, a foreign trading. So likewise, what is the benefits of this capital market is that funds can be available at a local level, which means within India funds can be raised within India. So there is a reduced foreign exchange risk. Foreign exchange risk can be reduced if the capital market was effectively used for a fundraising on the part. Next one is the financial development. Okay, financial development through trading activities. What happens is that common people like us also do a trading in a share market. So what happens is that a financial development will happen. More people were investing in a business, more people were investing in a companies. What happens is that there will be a development in the finance, raising of a funds was increased. So the cost of the funds was reduced. So business activities will be improved. So these are all the benefits financial development. Okay, benefits for a government. Once the financial development also happens at a country, what happens is that a government can raise more tax from businesses. If a lot of a business was engaged in commercial activities, a government can able to raise a more tax because of a more investment and more business activities. So that is what is advantage for a government. Next one is the for the economy of a nation. What are all the economy of a nation by means of a capital market is the liquidity at a macroeconomic level. As already said in the previous statement, that here the liquidity was available at the local level. Local level in the sense liquidity was available within India. Business entities can be able to raise a fund within India from a general public or from entities or from PF funds, insurance, banks. So foreign exchange risk can be reduced and liquidity will be good. There will be a good liquidity. Next one is the financial stability. If the foreign exchange risk and other risk was reduced, there will be a financial stability. If more funds are available for a business activities, what happens is that there will be a financial stability for economic activities. Next one is the better management of a financial crisis. Okay, if any financial crisis happens, what happens is that a capital market and the fundraising activities can be done. So the effect, negative effect of the financial crisis can be reduced to some effect. Okay, so this is what a capital market and its characteristics, participants, and the benefits. Okay, thank you.